Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. As corporate frauds and failures unravel, one hears of action being taken against the statutory auditors by various investigation agencies and regulators in India for the negligence, complicity, misconduct, or incompetence of the auditors. While on one hand, agencies like the CBI, Enforcement Directorate, SFIO, Income Tax Department, etc., have been investigating the dubious role of auditors in such corporate crimes. On the other hand, the likes of the NFRA, the Audit Regulator, and the Reserve Bank of India, the banking regulator, have also been hyperactive in initiating action against the erring auditors. A recent report of the NFRA has indicted the auditors of ITNL, who are part of the EY network, for their collusion and misconduct, which helped to perpetrate the massive scam in ITNL and in the ILFS group. And shockingly, their misconduct and mischief as the auditors of ITNL began from the most fundamental and basic issue, which is they were not even eligible to be appointed as the statutory auditor of ITNL, and they yet accepted to be so. Not surprisingly, as auditors of ITNL, they gave a clean chit to the company. They did not report on the malpractices hidden in its accounts and gave no qualification or adverse remark whatsoever in their audit reports. NFRA has continued its tirade against the audit profession by raising another significant issue for public discussion, which is, should audit be necessarily made mandatory and compulsory for all companies, thus indirectly, according to us, questioning the very utility and need for conducting audit of a company in all cases. No wonder the audit profession is suspicious and is not even willing today to comply with the NFRA compliances. Auditors of listed companies in particular are required to file a return with the NFRA giving details about themselves and about the conduct of audits by them. A recent report says that over 1,000 audit firms, which constitute a large section of the audit profession in India, have not even filed such returns for the financial year 2019, thus painting quite an adverse picture of the profession. If the NFRA is taking action against the auditors, then so is the case of the Reserve Bank of India, which recently banned yet another audit firm, which is Haribhakti and Company Chartered Accountants, from undertaking audits of any RBI regulated entity for a period of 2 years, beginning from April 2022. This CA firm has been so banned because of its failure to comply with specific directions of the Reserve Bank of India with respect to the audit of what it calls a systemically important NBFC, which Reserve Bank did not mention, but it is well known. It happens to be Shrey Infrastructure. With this ban, Haribhakti and Company will have to give up its other statutory audits from next year, and those are of Axis Bank, RBL Bank, and also IndusInd Bank. Incidentally, in 2019, the Reserve Bank had similarly banned an EY audit firm called SR Batliboi and Company for 1 year for its material lapses and negligence in the audit of a bank believed to be in the case of Yes Bank. With widespread and misplaced public expectation, often not in sync with the scope of their work as per the applicable laws, the auditors remain in the line of fire. As per the public, the auditors are expected to know it all and report it all, which contradicts their very terms of appointment under various laws. The public also perceives their powers and scope of work to be much bigger than what actually it is as per the applicable laws. They think that they are powerful enough to find out and report everything, but that is not really the case. If the public at large is disappointed with the audit profession in general, then the auditors are themselves to blame for it. The auditors have often been found to have betrayed and diluted their independence and integrity for personal gains, and they have let corporate frauds take place deliberately, knowing very well that they have been negligent and collusive. And each corporate fraud has only increased the disappointment of the public, other stakeholders, authorities and regulators with the audit profession, resulting today in a much higher scrutiny and surveillance over them. the quality of work done by the auditors remains in doubt very often. It's because of their own conduct at times. This is evident from a recent speech of the Reserve Bank Governor at the NAAA, which is the National Academy of Accounts and Audit, where he mentions the various kinds of accounting and financial irregularities and frauds and puts the onus on the audit profession to unearth them and to report them. The Reserve Bank Governor said in his speech that the Reserve Bank has found many instances of accounting and financial malpractices. He urged the auditors to step in and to strengthen the financial stability of companies that they audit. He then said that there are many instances of diversion of funds, transfer of profits to connected parties through various means, which include intra-group loans on very favorable terms to these connected and related parties, over and under invoicing of transactions and asset transfers without fair valuation. The RBI governor said that the auditors need to identify and thoroughly scrutinize related party transactions and connected party transactions to ensure that there is no undue transfer of income or assets of a company such that the others benefit at the cost of the company they are auditing. Real transactions, he says, are camouflaged behind various layers of information technology solutions, resulting in the manipulation and mistreatment of the true nature of financial statements. He says that auditors need to see through these IT layers which have been placed by the companies and detect the real purpose of these transactions which are hidden under these IT layers. Mr. Das then says that the trust of stakeholders is the key to the stability and growth of an economy and financial markets. One cannot take the trust for granted, he says. Statutory auditors play a vital role in maintaining market confidence in the audited financial statements, and that's what they need to redeem. The RBI governor then mentions that financial sector entities, the audit community, and financial sector regulators and supervisors have to work together and take proactive steps to ensure good governance and ethical practices to build a strong and resilient financial framework in the country. He finally thus advised the auditors to be more vigilant, to be tech savvy, to adopt a holistic approach and scrutinize related party transactions and smart accounting practices in particular. To us, he has just increased and defined the expectations of the audit profession. The RBI governor is not the only one who has raised the bar of what is expected of auditors. The NOCLA requirement, which is non-compliance with laws and regulation requirements, requires the auditors of listed companies from 1st April 2022 to report on matters like fraud, corruption, bribery, money laundering, environmental protection violation, public health and safety, and any contravention of any law by a company that they audit. This means that auditors are now also expected to become whistleblowers, even if that contravenes the mandatory code of confidentiality under the regulations of the Institute of Chartered Accountants of India. From being auditors with NOCLAR coming in from next year, they actually become whistleblowers. This compulsion on the auditors to report any contravention under any law by a listed company will significantly increase their responsibility and their risk as professionals. The bigger question actually is as to how would an auditor know of any violation by a company if they are carefully hidden by the management and they are not disclosed in any manner by the company or the management to the auditors of the company? How would they find them out and how would they report them? As if these challenges were not enough, the reality today is that auditors face scrutiny by multiple regulators and agencies, which is Institute of Chartered Accountants of India, NFRA, SEBI, Reserve Bank, IBBI, and IRDA, to name a few. And it makes them answerable and punishable by all of them. Multiple regulators, each with a conflicting interpretation of the quality of work done by an auditor, have made auditors a very worried and troubled lot today. A common framework to scrutinize auditors and to take against the erring auditors is missing, making them very easy scapegoats and at the receiving end of harsh punishment very often. Action should ideally be taken by the body which regulates the audit profession, which sets up audit standards and evaluates the quality of audit, and not by all and sundry as happens today. Today, any regulator who is scrutinizing the financial statements submitted to it tends to act against the auditors based on their interpretation, and that has created a lot of confusion and havoc in the profession. A sense of fear and confusion does prevail in the audit profession today, with multiple regulators indicting and prosecuting them. A common platform is certainly needed. Amidst this situation, listed companies understandably continue to see auditor exits today. During the current financial year, on an average, an auditor of a listed company has prematurely resigned every 2 weeks. Corporate India has seen 15 auditor exits since April this year, with 5 exits in the month of September alone at Asian Hotels, Videocon Industries, AKG Exim, TBG Banquets, and Value Industries Limited. The fact is that the expectation mismatch, the increase in the scope of work, the increased scrutiny by various authorities, the increased regulation on auditors, and insufficient fees paid to them are making auditors exit from such audits, particularly where there are too many regulators that they can potentially face. It is a tough situation that the auditors face today, but to us, it is significantly of their own making, and it is also because of their failure to defend their own turf. It is their betrayal of their independence and integrity which has landed them here today. It's not that all of them are bad. It's just that all those who have indulged in misconduct or negligence or collusion happen to be very often high-profile auditors, and that is what gets high-profile, not very good reputation to the auditors themselves. This is Akhilesh Bhargava signing off till we meet again. Namaskar.